Great, fantastic. So welcome everyone to the top trade ideas for 2020. I hope you have been getting along well in the holidays so far and spending some good time with the family and friends and people you care about. And also taking time for you. It's super important that we all get a chance to do that. Wow, my coffee tea mug is a little dirty right now. All right, so top trade ideas for 2020. For the last couple years, I think, on our website, we've been posting top trade ideas. And what we do is we share a couple of trade ideas publicly, and then we have top trade ideas that we share privately with our members after that. And this year, we're kind of taking that and we're expanding the concept. So this time we're doing the top trade ideas live. So live on YouTube. This is our first live YouTube streaming event ever. And if it goes well, we'll probably do more in the future. There's definitely a learning curve for us, so we apologize for any mistakes on our part, but we're going to share trades on indices. We're going to look at some stocks. We are going to look at, let's see, indices, stocks, and FX. That's what we're going to be covering for this particular session here. So a couple trades in each section, basically, and then what we're going to do is we're going to we're going to do a private webinar for our members probably in a couple weeks. I think we're going to actually, maybe, Sasha, have we scheduled that for, is that the 3rd? Is that the one we have on the 3rd? That's the top trade ideas? Wow, that tea's hot. Yes, okay, so January 3rd, we are doing a top trade ideas for our private members. And we're going to go more in depth. We're going to share not only more trades, but we're also going to get into commodities and potential some option plays as well for 2020. But let's go ahead. And so before we begin, just kind of some basic things for this webinar. This is an educational webinar. We want to welcome everybody. And for us, making sure these webinar environments and these educational environments are good for everybody is important. So no like spamming links to other services. If you're going to, disagree or something like that, we're totally fine with that. Just make sure you use neutral or positive language. We don't endorse really using negative language in terms of communication styles. And so, that's fine. If you don't agree with some of these ideas or our approaches or something like that, we're totally fine with that. Just make sure you use neutral, positive language, because the goal of this webinar is to be educational and enjoyable for everybody. And, it only takes like one drop of poison to like ruin a water well. And it's the same thing for these kind of things. It only takes one person to kind of just ruin the experience. And, you don't want to be that person. If you violate our community guidelines, rules, and everything like that, then you'll be banned, from that. So just try and be here and enjoy it. This is for everybody. And if you use this right, this can be very beneficial to you. So that's webinar conduct. We do have a risk disclaimer here. So none of this is financial advice. I'm not going to read this entire risk disclaimer because it's really insane. I'm just going to leave it up for a few seconds so we get the credit for that. But none of this is intended to be financial advice. You should always be getting financial advice from your financial advisor and professionals. This is not any sort of investment advice or anything like that. This is just the sole opinions of me individually. And this is all for educational content. So we are not doing this to solicit this in any sort of professional advice way that will piss off any regulators or create any legal situations, basically. So now that you've all read that, if you want to continue in the webinar, then you accept these financial advice and risk statements. So we are going to, before we begin though, and jump into our top trades of 2020, we are going to review our top trades for 2019. Hold our feet to the fire, and we shared, I think, 3 publicly last year, and it was the ASX 200, Facebook, and dollar yen. We're just going to briefly go over those, and then we're going to jump into this. And so what we'll do is we're going to go over top trades for 2019. If there are any questions, you can go ahead and ask them in BAM. You can ask them in Zoom, or you can ask them in BAM. You can ask them in YouTube channel, and then we'll take questions after we review the 2019. Then we're going to jump into 2020 top trades. And I think we're starting off with indices. Then we're going to get into, so we're going to start with indices. Then we're going to get into our, we're going to get into FX. And then we're going to get into some stocks. And then after that, we'll open it up for full Q&A. We'll do brief Q&A in between each section. So we'll do, indices, then we'll take some brief Q&A just on those particular charts and trade ideas. Then we're going to do top trades on Forex, and then we'll present them. Then you can do some questions on those particular charts only. Then we're going to go over stocks, top trades for 2020. Then we'll take questions on that. Then we'll do open Q&A. If you have some top trade ideas that you think you'd like me to, are good trades and you want me to review them, then you will post the pair, you will post the time frame that you want me to look at the charts, and then I will examine it and use my skills, analysis, and strategies to analyze that and give feedback on that. And then we'll do open Q&A, and that's and then we'll wrap it up for a day. So let's start off. Our first top trade idea of 2019 was the ASX 200. And this is the chart you're looking at is the actual chart that we had posted on our website. If you want to, Sasha, can you go to our website and in the search bar, look up top trades 2019, get the link to that, and then post it in Zoom and in the YouTube stream? Would you be able to do that? Awesome, thank you. So this is the actual chart that we had posted. We had actually 2 sell recommendations. If you look at that particular article, we wanted to sell here and we wanted to sell here. This was the prior all-time highs, and we felt like we were kind of getting into rarefied territory. And being the all-time highs, that generally means 2 things. So your first time back to all-time highs, especially something that hasn't been visited for, a long time, is over 10 years. That means 2 things. One, bulls that are already long heading into this all-time highs, they're going to take profit at that. There's definitely going to be some bulls. There's no way there isn't going to be a fair amount of bulls that aren't going to take profit at that, especially something that hasn't been visited in 10 years. So that's the first thing. The second thing is that you're also going to have some bears who are going to be looking for trade locations to get in. They're going to see that all-time highs, recognize that some people, particularly longs, are going to be taking profit, and they're going to sell at that particular trade location. So we suggested 2 sell recommendations at 63.56 and 68.77. Here's how the chart actually played out. So this was this kind of boom up here. So, oh, wrong way. So here is this one here. It did sell off very aggressively. This is a different, by the way, broker feed. We were on XTB before, and here's our other one. So we had a good sell-off, about 940 points. And then we had another sell-off on both of these highs here. And it went down about 500 points on that one. So both of those were very profitable trades. They worked out pretty much exactly as we had anticipated. So this one did pretty good. Our Facebook one did not pan out. We felt Facebook was kind of peaking. And so we were looking for a small sell here and a larger sell here. And this is basically what happened. Our first sell location, which was between 183 and 193, we just did a midway point, 188. If you didn't get stopped out, yeah, you got about $28 in profit, but it didn't hit our 150 target. It only made it to about 160. So that one would have been stopped out, and our second one wouldn't have been activated. Am I open to reselling Facebook? Yes, we can talk about that more once we've gone through our live trades on that one there. So that one did not work out. And then this one just simply didn't even activate. We had suspected that dollar-yen was going to make it back to the resistance zone at 14.29, and we would be looking to sell this resistance zone. And as you can see, here's the 14.29 resistance. It just didn't even make it. So this one was a did not activate. So 2 wins, 1 loss, and a did not activate. Those did very well. For our private members, we'll go over, what do we have, another 7 or 10 trade ideas? We're going to go over that during our live webinar. We definitely did pretty good on a lot of those. So that covers 2019 that we had shared publicly. Now, top trades for 2020. We're going to start off with indices. I think there's a lot of really good indices to look at here. So let's pull up. There we go. And I want to look at not the ASX. Stock 600. So in case you don't know what the Stock 600 is, that is top 600 stocks in the Euro stocks in the Eurozone region. I think it's like 17, 19 countries. It's about 90% of the entire free float cap. So it's quite a lot of stocks. Let's start off with the daily time frame. I am very bullish on this right now, at least for the first quarter of this year. And I was hoping it wouldn't break out, but it did over the last 1, 2, 3, 4, 5 days. And so what am I looking to do? Let's zoom out for a second here. And let's actually go to a weekly. Just kind of get a little less candles. Okay, what do we see here? So we have a pretty strong trend here, very minor pullbacks, only one decent pullback here. Then we make an all-time high at about 410, 409 roughly. We have a decent sell-off in 15 and 16, take some time to recover. We actually did not revisit 410 till just a matter of a few weeks ago. And now that we have cleared this, you've cleared out, by clearing the all-time highs, you've cleared out any bear orders, any sellers that wanted to be parked here. They are now stopped out. And if they got stopped out, then they had to, in terms of flipping their position, they had to go long to exit their position because they were short. Getting stopped out gets out by a long. So they helped this whole little breakout here. You've also created a way for technical longs to be like, hey, you've cleared out the all-time highs. We now want to get long. There are certainly CTAs and technical longs that are going to be adding positions now that we are above 408. So do I want to be getting long here? No, I don't. I want to be getting long on a pullback. And let me kind of explain why I'm looking at this particular resistance zone or support zone now. So there are 3 ways that I could draw this support zone. Or 2 ways I'd really draw it. This is a very thin support zone right here. It includes the prior all-time highs, which is really, other than March to July of 2015, this little level here, 408 all-time highs. Other than that, we only have a few weeks above here. So we don't have a massive amount of order flow there. We have a fair amount. We have this order flow right here. And that's a fair amount of orders that were parked here. And then this, and then that's it. It's been gone. So this zone is if I wanted to get long, this is a very shallow zone in my opinion. And so I would be layering it, but I would rather draw a pullback zone and a support zone down to about here, which includes this and all of this, boom, 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 which also includes the support area that launched this leg higher, including the breakout. So this leg higher, it didn't even really stop. I mean, just a brief stop here, a couple weeks, and then it just tore right through it. So clearly there is a lot of buyers who are long at 365. And that creates a situation where these people who are long, they're in profit. They probably taken some profit here. But those that were holding for longer and expecting this to continue going, they're going to defend any pullbacks to this level. And even as they get close, if the market was to pull back, they're going to defend a lot of this. So I like this thicker support zone, and I like layering trades in this here. So layering trades means I'm going to create a stack of orders or layers of orders. And I'll start off with a light amount of positioning here at 408, which is the all-time highs. I'll start off with a medium amount of positions here, and then I'll put a larger order in this kind of zone around here, say between 375 and 366, 365. So I'll start layering orders in, and ideally I'm going to get a pullback into the zone, and then it launches higher. I think if it starts to break this zone, then you're going to see a lot of technical bulls, especially the ones that are long here, unwinding their positions, and I can easily see it making it down to 350, which is resistance here, 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 and some support here, and resistance here, and resistance here. And if it gets below 350, then you're making it towards these swing lows here and all of these lows down here. But at least for the first quarter of 2020 and this new decade, I'm expecting Euro stocks to continue. And other than some sort of like major sell-off recession or something like that, where all the indices are falling across the board, short term, how do you not be bullish on this? So Sasha, you posted the link in Zoom. Can you also post it in the YouTube webinar as well? Are you allowed to post links in the webinar? No, YouTube removes them. Can I do it? I wonder if I can. That would be interesting. Let's see if I can do that. That's kind of nice that YouTube does that. It makes sure people aren't going to spam it. Yay, I can do it. Okay. That's awesome. All right, great. So this is stock 600 here. Next one I want to talk about is we're actually going back to ASX 200. And now what do I see? So we have, let me move this down a little bit. We have these all-time highs. This to me is a breakout formation. Let me get a little line going in here. That's a breakout formation. So why is this, at least for now, as long as this formation continues to hold, this is what we call a breakout squeeze. So what do I mean by a squeeze? And I've talked about this. I think I even did a video called on my YouTube channel called the one breakout pattern you must learn, basically. So why is this a breakout pattern? So zooming into this, strong bull run, super impulsive. There's very little pullbacks in this. We hit the all-time highs. Bulls taking some profits, sellers coming in. Here's your pullback. So you got about 500-point pullback. But look what happens. The bulls immediately start to re-attack this again, and then every pullback gets more and more shallow. So the bulls are stepping in at higher locations. First they start here, now they're stepping in higher, now they're stepping in higher, now they're stepping in higher. And so they are continually squeezing out any bears that are here. And you know that the bears are getting squeezed because their sell-offs are getting weaker each time. And if you are selling off and you're getting less of a pushback each time or less progress, then you are, if you're a smart trader, you're seeing the ink on the wall. You're seeing the writing on the wall, basically. And you're realizing that the bulls are continually coming further away from support. Here is support, but they're buying higher up, they're buying higher up, they're buying higher up, they're buying higher up. That is a clear communication that the bulls are continuing to take over control of the order flow from the bears. Any pushback that the bears have, they're just taking the punches and coming right back. And so that to me is kind of squeezing out all these bears. And if this pattern continues like this, then you're going to see a breakout. And it could be one of those where it's a really strong breakout and it just takes off and doesn't come back for a while. Or it can be one where it kind of has like one or two impulsive bars, really strong bars, comes back to here on a short-term basis, finds buyers, people who are short, now realize they've been stopped out. Once it gets above here, they've been stopped out. If they're smart, they're going to switch long. So they switch long. Them getting stopped out actually helps fuel the breakout. And then if they're smart, they're not married to being short. They realize, hey, we were wrong in this one here. Bulls are in control. Let's flip our positions to long. And so they're going to be getting long on pullbacks into this resistance area here. So either strong breakout and we don't revisit this for a while, or breakout pullback and then launch higher in this one here. So I like this. I mean, you're seeing a pattern on a lot of these indices that a lot of them are just looking really strong as a whole. Nifty's looking really strong. You know, a lot of the European indices are looking strong. There's just a lot of indices as a whole. Even the Hang Seng, which has been marred by a lot of the protests going on in Hong Kong, that is actually starting to recover. And so when you look at even the weakest of the indices are starting to recover, and then the strong ones are maintaining strength, that usually communicates a pretty strong start, in my opinion, for 2020. So, and if you look at statistically, just even the S&P over the last, I don't know, since the 1930s or 1920s, anytime the S&P has gained 25% or more in the prior year, the majority of time, like 60, 70+% of the time, the next year is a positive year. Although it's not as generally not as strong historically, like it's rare that they have like a 25% year and then another 25% year. Usually they have a 25% year, and then the average S&P gain after gaining 25% in the prior year is generally about 7%. So if that statistic holds and the S&P does gain this year, then we would anticipate that probably a 7% gain in the S&P. So that's kind of what I'm looking at for indices. Okay, before we move on to Forex, any questions on that? I got to look both left and right. I got questions in Zoom and I got questions in YouTube. Doesn't look like it so far. If you have a question and you're in Zoom, you can type it into the Zoom questions. And if you have a question in the YouTube, you can type it into the chat here. But it doesn't look like we have any questions right now. Okay, great. So let's go ahead and move on. And so our next one is Forex. So, okay, no questions rolling in. Fantastic. So FX. I think the US dollar, this is my first top trade for 2020. I think the US dollar is going to weaken this year. I think it might have a brief kind of gain, but I do not suspect we're going to break these all-time high or these more recent highs here of 103. I think at best we get a little bit of pop up and then we're going to sell off. And I think the US dollar is going to lose ground as a whole. And we're starting to see, you know, for those of you who have been watching the FX pairs, if you look at, you know, a lot of the majors, most of them recovered most, if not all, of their gains of where they started, or all their losses of where they started the year. So pound started mid 27s, went up 32 down to 19 roughly, or 120, spiked up after the election 34. And where is it now? It closed the year at roughly, assuming that, you know, today is going to be the rough close, 30.90. So it actually, after losing 600 points, 700 pips from the open, gained only a few hundred to start, lost 600 from the open, which is about an 800 net loss from the highs, and then rebounded sharply to gain back into the positive. That shows that, hey, you know, we were starting off bad and we've been able to recover just in the last 4 or 5 months. The pound has been able to recover all of its losses for 2019, and it's ending the year positive. Euro wasn't quite as fortunate, but it is starting to kind of build. Like, this is the first time it's trying to build some time above this 20 EMA. You look at the weekly 20 EMA, since it's been below it here, we've only had a couple weeks above it here, 1 week above it here, a few weeks above it here, and that's right back below it. Here it gets above it, then it makes a new higher low, and now it's holding back above it. So it's showing some signs of transition. Same for Kiwi dollar. Kiwi dollar started the year around 67, low 67s, and it kind of had a similar pattern to the pound. Went up a few hundred pips, went down a lot more, and then in the last 3-4 months, recovered almost all that. It's literally less than 100 pips from where it started. And so you're, again, seeing recovery across the board. Australian dollar, same thing. So started the year, one of the weaker ones so far, but started the year at 71. Again, same pattern. Went up a little bit, down most of the year, strong recovery in the last quarter. And if you notice, again, it's spending more time above the 20 EMA. This is the furthest distance it's had from the 20 EMA. And that's off of kind of like all-time lows for the year and then higher lows and 4 weeks of gains. I don't think it's had 4 weeks of gains the entire year in a row, and this is the first 4. So you're seeing this across the board that the US dollar is weakening against a lot. And it's not just in the majors, you're also seeing it in the minors. And so when we go to the DXY, the index, this is what I suspect will happen. And Chris, I'll get to your question in just a second here. So, all right. So let's look at this particular resistance area. Look at these two resistance. That and that. Okay. Okay, so super strong bull move, super impulsive. For those of you that in my price action course, you'll see it's a non-volatile trend. Then we have a corrective structure pullback. at the top of the trend. What does that mean for those of you that are in the course? For those of you in the course, you should know if you have a strong bull run and then you have a corrective structure at the top, probability suggests the next leg is up. That's exactly what happened. Made new highs at 103. Then it made new lows below the corrective structure, tried to find some sort of momentum here, false break, but didn't. Made new lows for the year in February 18. But look at the rest of this since. You see how this is a lot less impulsive than this? I mean, this is just super aggressive. This is super high momentum. You have consistent distance from the 20 EMA. Mathematically, the price action, if it has consistent distance from the 20 EMA, that can only happen with super high momentum. It's mathematically impossible to maintain that distance from the 20 EMA consistently over time for weeks and weeks on end without having high momentum. But here the momentum isn't quite as much. You see a lot more pullbacks, more time below it, deeper penetrations, and struggling to maintain that 20 EMA. So we're seeing kind of some sort of transition in the price action and the order flow. And now, instead of every dip below the 20 EMA normally made another new high, so dip below the 20 EMA, made another high, dip below the 20 EMA, made another high, dip below the 20 EMA, made another high. Dip below the 20 EMA has not made a new high, and it's making a slightly lower low than this one here. And so again, we're seeing some transitions in the price action and in the order flow. And so my suspicion is you either have a scenario where it goes like this, hits this resistance up here from here and here, and then sells off, or it tries to make a run here. And if the price action starts to kind of peter out and the candles start to get smaller and it starts to just have more and more wicks to the top side, more and more rejections, then there's definitely going to be, in my opinion, a fair amount of selling pressure here, and it's going to re-accelerate to the downside. I'm suspecting that the US dollar index is probably going to end the year closer to 93 than it will 103. Obviously, that's going to have an impact. The US elections in November is going to have a major impact, but it's hard for me to say, you know, if we haven't gotten to either of those locations by the time the election, then the election, depending upon who's the nomination on the Democratic side, who wins the election, is going to have a massive impact upon that. No doubt about it, especially with some of the candidates in the Democratic field this year in the US. That has a potential to have a major impact upon markets. But I suspect that the US dollar is going to weaken because we're just seeing in a lot of the majors, you're seeing a lot of this transitional price action and order flow. And so I suspect that the US dollar is going to end the year negative. Now, it looks like we're getting some questions here. Kristan's saying, will this be recorded? Yes, it is. It's being recorded, and what will happen is that we will upload it once we've made some edits and everything like that after that's all said and done. So good question. Okay, so that is my dollar index trade that I'm watching. I have another one. This is actually a trade I'm in right now. Your ruble. So let's go to a different index because that feed, that is not good. Let's see if ICE has a good feed. Much better. Okay. So why the hell am I trading your ruble? That is a really good question. Okay. So first off, I am short on Euro ruble already. I have a position that's active right now. I entered it a few weeks ago. The whole point of this Euro ruble trade actually goes back to my days as a broker on Wall Street. So if you are short Euro ruble, is that carry negative or is that carry positive? You can go ahead and type in the answer. There's more people coming into Zoom. Okay, that's good. And Jabulo, we'll get into this after we finish. We'll get into your question after that. And Tiago, We don't have a specific session covering commodities today, so we'll cover that at the end when we do open Q&A. So go ahead and save that question for a little bit later. But if you are short, okay, so Robinson's got it. So if you're short your ruble, you are short, you have positive carry basically. That means every single day you hold the position, you have carry that is going to stack into your account every single day. So if I was to hold this position for 365 days of the year with a 10 standard lot trade, I am making $161 every single day. If you do the math, that comes out to about $59K a year just in carry. And so this position could go nowhere in terms of price. Like literally, it could start the year at 69.53. It could end the year at 69.53. And I will have no directional profit, but I will have $60,000 a year in profit just from carry. That is one of the advantages to carry trades, is that you are creating a second income stream. So carry trades have kind of gone out of favor because of the, how could I say, because central banks have been easing and everybody's been bringing their rates to zero. When I first started trading actually about 20 years ago now, there were huge divergences in carry rates, absolute monster differences. You know, anywhere between like 1 to 2% on the low end, up to 6-7% in terms of carry rates. Because most central banks have been bringing rates down to zero, close to that, carry trades have kind of disappeared, except in EM, emerging markets. And so the Russian ruble, they have a huge carry right now. South African rand, Turkish lira, but that's too volatile, especially with the situation with Erdogan there. And so you have Mexican peso, you have ruble, and you have South African rand. South African rand is definitely volatile, but of the other carry trades, Mexican peso is starting to gain strength across the board, and so is the Russian ruble. So let's look at, what are you seeing? You're kind of seeing the same pattern in dollar ruble. After kind of this brief move up, very strong move, very parabolic, new highs, very weak highs after that. You know, I mean, there's a breakout structure here, impulsive, corrective structure, breakout, but it pretty much gets to this resistance high, not even close to this, sells off. Weak bounce, further selling. Weaker bounce, lower high, and further selling. So ruble is gaining ground the last year and a half against the dollar. As you can see, the same pattern is in play against the euro. It's almost an identical pattern. It hits these prior spike highs, hits the same highs, new lows, weaker highs, new marginal lows. So I suspect the ruble is going to gain. Therefore, if you can find currencies that have very low interest rates against the ruble and technically look like they could stay where they are or even gain marginally, then you get a massive carry trade in your favor. Also, dollar MEX is showing something similar. Dollar MEX has been actually gaining and holding its ground. It failed to hit these new recent all-time highs in 2017. And besides this resistance here, now the ceiling is getting lower. So here's your ceiling. Now here's your ceiling minus a brief spike above ceiling and then lower highs. And so dollar MEX is one of those that's a very strong carry. I wouldn't trade dollar MEX at current levels. I would want a pullback higher in dollar MEX before shorting. It's a much better position technically. It hasn't broken these recent lows. Euro ruble has broken these lows. And so because of that, actually, sorry, wrong feed. We'll go to ICE for right now, which is better. Euro ruble has made lower highs and lower lows. And so to me, if the euro could stay the exact same against the ruble, or if it loses ground, I think it could go anywhere between, say, to 67. If we get a much deeper push, we could get into the 60s. That would be fantastic. That would be the cat's meow. If the euro could go to 60 against the ruble, not only would I make a ton of money on carry, but my directional trade will be huge in terms of profit. So that would just be the absolute cat's meow. That would be berries. But I'm suspecting that it's probably going to stay in this kind of 69. It may get up a little bit towards 73 or something like that, which if it does, I'll just add on more. But I'm suspecting it's probably going to have a range between, say, 73 and maybe right around 64, 65. As long as it's net positive in direction, I don't lose any money on the direction, and every single day I just stack up that carry into my account. So that is my other carry play. There's definitely other carries. I'm watching dollar mex, euro mex. There's some really good ones there. Dollar ruble, if it gets a pop up, that kind of aligns and synergizes with my USD negative for this year. So that's kind of what I'm watching on this one here. Okay, looks like we got some questions. Okay. What are the risks? Daniel SAS says, what are the risks of carry trades? How do you consolidate the risk to negative carry? So the risk to any carry trade is direction, unless you're a negative carry. If you're positive carry, you are automatically gaining every single day the positive carry, assuming that trade has positive carry. Not many trades today in FX have positive carry or significant amounts. And even though one currency could have a slightly higher interest rate than the next one, you can actually have negative carry being long or short. Why is that? So for those of you who don't know, when brokers publish carry rates, just like your spreads on your actual trade, they are getting spreads themselves from liquidity providers. They actually have, generally they have a guy or they have an algorithm built into their dealing desk that literally pings all their liquidity providers and saying, look, which carry rates are you offering? And if the broker has it set up nicely, then they will publish the best carry rates. That's what they'll offer to their clients, basically. Hey, this is the carry rates that our liquidity provider is offering. We're going to pass this down onto you. We're going to take a little bit of the spread of that carry. And then after that, that's what we're going to offer. After the spread, if some of them are already marginally close, you could have negative carry being long or short. That's why carry trades are much less in vogue today, because you need a much wider spread today, and not many currencies have a huge spread in terms of carry and interest rates right now. G10 across the board, very marginal, very, very marginal. That was not how it was when I was trading and when I was a broker on Wall Street. When I was a broker on Wall Street's, carry rate divergences were huge. And now that's almost gone. You actually had to move to find your beta, basically. You had to move to find and ways to add on, how could I say, greater performance. And by doing that, you had to increase risk premium. So if I had a positive carry trade back in 2004 between the pound and the yen, there wasn't that much risk premium because you're talking about two G10 currencies. But if I have to start moving to ruble or Mexican peso, that increases risk premium. And that also increases volatility. So the risks go up to that. Now, in terms of what kind of risks you have, if you are negative carry, then every day you hold that trade over 5 p.m. New York time, you're going to be charged a carry cost on that. And your broker will do that. And they should have carry tables. And some brokers even have it when you open up a trade ticket and you start putting on, hey, I want to buy 10 standard lots of this and that, long, short. It should tell you how much your carry is per day, positive or negative. Most brokers should do that. Otherwise, you have to go to a financing table within your broker should do that. So if you're carry positive, every single day you hold it over 5 p.m., you're going to collect that money. It will just go automatically into your balance. It doesn't even go into the actual trade itself. It goes directly into your balance. If you're carry negative, then they're going to deduct it from your account every single day. That's why if you look at your trade reports, there's the profit and loss from the direction of the trade, but then there's also the carry cross. Some brokers call it swap, basically carry swap. So that is how the carry trades work. If you're going to have any sort of long-term trades, 5 days, few weeks, few months or longer, you want to be as carry positive as possible. And if you are going to be carry negative, then you want those negative rates to just be super small so it doesn't eat into much of your profit. Because if you do, if you decide to buy euro against the ruble and maybe the trade goes a little bit in your favor and you close it out for a directional profit, but if it took you 3 months to get there, you are eating that carry every single day. And so that's just going to continue to eat into your net profit, your directional profit on that. That's why carry trades are so interesting, because you have directional profit equity curve and then you have carry profit equity curve. It's one of the few trades that you can do 2 equity curves on it. Very much like in stocks, you have dividends. If you're long a particular stock, well, you'll collect the dividend when they give dividends out. So you get 2 equity curves, basically. So hopefully that answers your question on that, Daniel. Tiago saying dollar max more looks more like a consolidation before another leg up. Possibly. Possibly. That's certainly possible. But what we do see is that if you look at kind of this particular structure, so let's look at this. I think that will do another line like that. Okay, great. And let's get rid of this for a second. Okay. High 2198. God, I wish I was living in Mexico at that time. I lived in Mexico from 2012 to 2014. And as you can see, we were way down in the 11s, the 13s, 14s. Living in 22, that would just be insane. Be insane. But look how far we are off from the highs. So here's 2195. Where are we right now? 1883. We're $11 off the highs of this consolidation, and we're only $1.10 off the lows. And if you look at, again, which side is collapsing faster? So which of these sides is collapsing faster? Looks to me like the top side is collapsing faster. So if, this holds and this holds, that's fine. I'll sell a dollar max higher. And if I have to hold it for, 1, 2, or 3 years just to even get break even on my direction, I'm totally fine with that because I'm stacking carry every single day. I am happy to sell dollar next between 1953 and 2077 because I don't think it's going to sustain these levels. We're $11 off the highs and we're only $1.20 off the lows of this corrective structure. So it may find support 1855, 1876, 18 flat. But if this continues to weaken, then I suspect we're going to make our way down here. So that's how I'm viewing dollar max. I don't think your answer is necessarily wrong. When I look at which side is losing the ground since we've had this kind of pop up here in the high of January 2017, I see the bulls losing more ground than the bears. Mr. Sane, please explain carry trade and how we can take them. So I think I did explain it. Let me know if after all that, you still need some question about that. Is carry same as the swap? It should be. Some brokers just say swap. Some brokers just say carry. How do we know the swap is positive or negative? You would, when you open a trade ticket with your broker, there should be something that will say like, look, overnight funding costs or swap or carry costs or something like that, or interest or something like that. There should be something in your brokerage tickets that does that. If your brokerage ticket doesn't do that, then they should have something on their website that says carry rate schedule. And they should be publishing every single day, hey, these are the carry rates for today. These are the carry rates for yesterday. They should have that. So that's something with your brokerage. Ravi, good to hear from you. Euro Nook. Euro Nook's interesting. I don't know if it's a huge carry. So for every standard lot, I don't have my brokerage platform up, but for every standard lot, how much do you get per day? Like, is it a huge difference or is it minor? I mean, what I see here is this is kind of a breakout structure, but this is suggesting that there is a potential false break happening in Euro Nook. I think if it gets below, say, 956, then I think you have a pretty good false break in play, and then you're going to start seeking out these and these and these and these. So you could either, you know, wait for this to clear, look for a pullback here, and look to get short. This is just my opinion. You know, targeting these kind of swing lows here, ideally a much deeper swing low. But yeah, I don't know if there's huge carry differences between Euro and NOK. Definitely not the same. It is, even though it is a European country, does it have more liquidity than MEX? That's a good question. Maybe. Yeah, I mean, there's a decent chance because there's a lot of European trading partners, but MEX is a pretty well-traded EM currency. So I would want to wait till the technicals kind of show themselves. I would like the false break to kind of complete itself before I look for that potential carry trade. But that would be how I'd be approaching it. For those of you who have questions on, as I said earlier, questions about instruments outside of what we're covering, we'll get to that when we get to our open Q&A. So oil, gold, Aussie Kiwi, let's examine that when we get to the open Q&A because we got more. So Avanish Fasate is saying 1 standard lot pays almost 7 Aussie on a short position Euro NOK. That's not bad. That's not bad. That's okay, to be honest. It's not fantastic, because 10 standard lots in Euro ruble or Euro MEX pays roughly $16. So $7 is less than half, but it's still not bad. It's still not bad. Each broker is going to have different ones. Yeah, each broker is going to have different carry rates. They shouldn't be too far off, but you should check with your broker because each broker is going to have its own carry rates. Okay, so those cover my currency top trades. We're going to do a lot more for private members. Let's look at stocks. I have a couple. Actually, let me go to different chart. Okay, so let's start off with AMC Entertainment, for those of you in the US. So AMC Entertainment a few years ago was bought by a Chinese company. What you're seeing is how many people go to the movies the same amount today as they did 5 years ago. How many people go to the theaters the same amount today as they did 5 years ago? Lars has a question. I got a couple questions on the prior. So S is saying, are you neutralizing price risk on the ruble trade with options? If I get some good pricing on options, I'm open to that. I'm totally open to that. But I'd like to wait to the new year and see what kind of, because you wouldn't want to price options before the new year. Liquidity is really bad. So I'll wait to the beginning of the year and then look at options pricing on the euro versus the ruble to neutralize the upside risk. Lars has a question here. Chris, the swap on my broker for dollar MEX is 324.52 points short. Does this mean for each lot I get 32.4? It depends. Each broker, it's really weird. The way brokers price it is just weird. It's not, some will say points. Some will do it in the base currency that your account is based in. Some will base it on the base currency that you're trading. It's really weird. So it's hard for me to answer that, but I doubt you're getting $32.4 being short dollar MEX, because short dollar MEX has a smaller carry than Euro MEX. Euro has much lower rates than the US. So to me, that doesn't make much sense. I would contact your broker to see how they translate that. Yeah, that's the weird thing. I wish there was much more universalized or standardized ways for publishing carry rates. Okay, so go out. Okay, Ravi says rarely go out to the movies now. Nowadays, more Marvel, Star Wars, cool. 30% less going to movies. Yeah, majority as a whole are people going to movies. Now, along those lines, what are you watching more of? Are you watching more Netflix and streaming services than going to the movies? I'm willing to bet 7 out of 10 people are. maybe even more. Like, who here watches more Netflix and more streaming services? Like, when Game of Thrones is coming out, you didn't need to go to the movies because each episode was almost like a movie. There's much more activity going on in Netflix and Amazon Prime and now Disney and all of these things. So as streaming services continue to increase market share and attract more of people's attention, what's going to happen to movie theaters and companies? Their stocks are going to go down. And if you look at AMC, it seems pretty clear that that's what's happening. Now, let's kind of dive into the price action a little bit, and then I'm going to talk about how I want to trade this. Netflix, Disney, Mandalorian. Yeah, we'll be talking Disney for my course members. But okay, so let's use a different tool on this one here. It was the, which one was it? No. There we go. Okay, hold on a second. Trend angle. Okay, so I'm going to measure these pullbacks after these sell-offs. So we have strong sell-off, pullback, and let's just measure these pullbacks in terms of angles, and then we're going to use a time calculator and look at it. And it's going to look very interesting once you start to see it. Okay, so now date range, there we go. Bam. Bam. And bam. Okay. So strong sell-off, corrective pullback with some impulsivity to it. It is kind of like a channel, basically. You can see the underline here, This pullback, overall 31-degree angle in the price action. Yes, it's on both sides, but let's just not pay attention to the angle too much. Look at how many days it took for this pullback to happen. It went from 1086, 21, it's over 100% increase, 216 bars, 315 days for the pullback. Okay. Then aggressive selling over a period of what? 4 months erases all of that 350 days worth of gains. So 4 months of selling takes out at 315 days, a much longer period of time gains. So it takes a long time to gain and takes a short time to lose all that ground. That's not good. Then look at the second pullback, 114 days. Now we're about a third. Bounces are only operating at about a third as long. So they're not able to sustain the bullish momentum for the same amount of time. Now they can only sustain it for a third of the time. That's also not good. And even though the angle is stronger, it's much less in terms of time. Then the sell-off completely eats all that and goes even further and makes new lows. Then you look at this last pullback, 32 days, which is now what, a fourth, roughly, a third and a half, maybe a fourth of this entire pullback, the prior pullback, lesser pullback. And what happens? Again, eats all that and then some. Most likely this is insiders buying, really trying to prop up the stock, but they're able to prop it up here for a fair amount of time. Bulls can't hang around as long before they get chewed up. And here it's a little over a month before they just get completely eaten alive. That tells me that this company is in trouble. And so you can see each pullback is just continuing to get weaker. We're making new lows. For those of you that are in the price action course, you should be seeing breakout structures here left and right. So what are some potential sell locations? I actually think AMC, let me see if I have, aha, there's the right document. I had 2 documents for my top trades, and this is the most recent one. So I actually suspect this is going to, let me get rid of all that there. Clean up. I'm looking to sell. I have a couple sell locations. And this one isn't bad. I have an 885 sell. If it gets to 1203, I'll sell it there. I actually think AMC is probably going to $2 or $1. I think it's in trouble. And then I think once it gets to $2 and $2 or $1, it's going to get bought out. You're seeing a lot of consolidation in the movie industry in terms of movie theaters. And so, you know, AMC was bought out, if I'm correct, by a Chinese company. I forget the name. And I suspect that if they start going to $2 and $1, somebody's going to be looking at a buyout because they have a lot of theaters, but they're just not making the business model profitable right now. So that I think is probably going to happen. And then if they do get bought out at $1 or $2, then I'll look to flip to get long, because a buyout from a good company will probably send the stock up 5, 6, you know, back up to 8, 733, 85, or even 12 again. So I'm actually looking for kind of a round trip trade on AMC, but I think it's in trouble. I think it's in a lot of trouble. If it gets below 1, then generally once a stock gets below 1, especially on the NASDAQ, then it's at risk of being delisted from the index. And if you get delisted, you know, that's curtains, basically. No pun intended for the stock here. So, you know, I actually am very bearish on this right now until I see some sort of buyout or something like that. But if you start seeing it get sub 1 prices, they're going to get delisted, because most indices have a minimum price requirement to stay on that index. And if you can't maintain that, you get kicked out and sent to a weaker index. And then that would just be that would be very problematic for AMC. So that's one of them there. Okay, we'll get into a few of these right here. Questions in just a second. The other one, coolest stock symbol ever. RAD. You wouldn't think this would be the company for it, but Rite Aid. So Rite Aid had a very interesting situation. So let me mark a few levels here real quick. Yeah, let's get another one. So for those of you that do trade stocks actively, which I do, Rite Aid was one of the best performing stocks in December, up 120%, which is insane. And it did it, you know, in the last 6 days. Now, granted, some of that was low liquidity market melt up. Granted, a lot of that was because there was a massive, massive book of short sellers in there. But part of the reason why Rite Aid actually did so well was in 2018, they got bought out by Walgreens. And, you know, Walgreens being a much bigger company, took on Rite Aid and really started to revamp them. But you can't just change a company overnight. It takes time. And they started to make a lot of changes. And now those changes are starting to manifest, because in their Q3 results, they had prior year Q3 had experienced, I think actually for all of 2018, they had a net loss of about 4.5 million net profit, or 4 million or billion, I forget. And then this quarter alone, they made more profit. I think it was like 45, close to 50 million net profit. They went about 10 times more than their net loss of 2018. That is a massive, massive shift in profitability. And so any short sellers that were in there, they got squeezed, completely obliterated out of that. And so you saw this massive short squeeze. Granted, low liquidity holidays definitely helped that, but those shorts got absolutely crushed. So what do I see as happening as two potential scenarios? So for those of you that are in my stock trading course, I see a 50F set up right here, possibility. That's a potential. What I want to look for, if I think it's going to fade, if I think the short squeeze is going to fade, that it's going to need to get below this, and we're going to need to see declining volume. Let's throw in some volume. And so just enormous volatility, huge amount of volume. I mean, that is just absolutely insane. So if it gets below this kind of resistance level, which is now support, you can see it because of here and here. I think there's some, was there further back? No. So support, bounce, sells through, becomes resistance. That's a roll reversal level, what we call an RRL. And then getting close to being delisted, you know, it's getting in the 5s, 4s, it's getting pretty low. Boom, huge gain. Now, so if this stays as support and volume stays strong, then in my opinion, there's a potential long opportunity here targeting recent highs and then 28. But I'm going to want to see volume staying strong, staying consistent for that to happen. If, on the other hand, this gets back below this and volume starts kind of falling off a cliff, then that kind of means one of two things. The bulls are no longer interested in holding the stock at this high a level, and that's going to bring in some short sellers. Anytime you have a stock with, I think it's like market cap is what, 1.1 billion? Let's look at market cap, 1.114 billion. So you have a stock with a market cap of 1.1 billion. That's not huge. You know, that's not nano, but it's kind of like, you know, it's not nano micro, but it's in small cap range really. I mean, it is kind of, but you're talking something that doesn't have a huge market cap. Anytime low market cap stocks have huge rises, the chance for that stock to lose a lot of those gains increases a lot. And if you start to see some of the additional signals, like you start to see volume falling off a cliff, then that's going to create buyers exiting their positions, and that's just going to embolden short sellers. If, however, volume stays strong, then that's going to suggest another leg up, probably towards the 28 region. So that's what I'm looking on that one there. Okay, so let's look at questions here for a second. Jabu is asking a question. Chris, what are your thoughts on the impact of elections? Are you done with this part? After you're done with this part. Okay, great. We'll get into this at the end of the Q&A. We are done with our top trades for 2020 in indices, FX, and stocks. So we can definitely get into this. Christian saying short HBO because short HBO because Game of Thrones always gets hacked prior to release. Yeah, I mean the Game of Thrones series is over, and I don't know if HBO has any major releases coming out right now. One thing that's interesting is that when you look at the amount of Grammys, say like Netflix gets and Amazon gets and HBO gets, HBO, if I'm correct, has the most Grammys for the least amount of money spent. And then I think number 2 is Netflix, and then Amazon spends a lot of money just to get a Grammy. So that tells me that, you know, Amazon's quality and content isn't quite there yet, and that they're just throwing a lot of money in it. Granted, Amazon has a lot of money to throw at it, but right now, if I'm correct, HBO gets the most amount of Grammys per dollar spent. So that is in their favor. They need to make some changes now that Game of Thrones is gone. They're definitely going to need to make some changes, but it's definitely something for the future. Okay, so let's look at, now that we're done, did I have any more? Okay, no. So let's look at, let's kind of do some open Q&A, and I had another, I thought there was another one. Let's get volume out. Okay. Jason saying, what were the top trades in FX? We covered them earlier in the webinar. It was dollar index trade. It was a euro ruble trade. We'll be posting the recording later. We've already gone over that, so we don't want to re-go over all that, but we will be getting into that. So let's look at some of these prior questions. I think one of the first questions was about oil. And oil looks strong. It's building. It's building a lot, you know. Okay, so let's get some resistance in here. So we have current levels, which are okay. this is obviously going to attract some attention. This is going to attract some attention. And then you have much bigger structural highs right around here. Okay, so let's impulsive, counter-trend impulsive, V bottom. That is, which kind of makes sense looking at this right here. God, how did I miss that? How did I miss that? Yeah, so V bottoms are not quite as common, especially big sell-offs from high 77s to 42. That's what, 60% value, loss. And then to have a massive, counter-trend impulsive move, that is not common. So a lot of profit taking, and then bulls just, this is a combination of massive profit taking and bulls coming in very aggressively saying, we are way undervalued here. We're so undervalued, we're willing to, just go bonanzas against this counter trend. I mean, we're going counter trend against this move, and we're willing to step right in front of that train and saying we're going to stop it and push in the other direction. And then they built a nice base of lows that instead of, so high, low, new high, same low, and just building towards these highs. So it seems like it's probably going to make its way pretty quickly to 63. I don't necessarily think it's going to break out of this on the first shot. If it does, then it's going to want to challenge 66. My suspicion is that it's going to hit here, pull back a little bit if the bulls remain in control, build a base somewhere between, here and here, and then try and break out a second time. Rarely ever does something kind of create a structural high, massive swing low, and then just launch right through that. Usually there's either like a squeeze, kind of like the Aussie ASX 200. So it's kind of that same thing. The first time we hit this prior highs, it generally just doesn't break through that. It's got to build. There's going to be profit taking, especially if it's been far away and then it reaches these structural highs back here. There's going to be some profit taking, and bulls are going to want to continue to build and establish themselves at these higher levels close to the resistance, squeeze it out, and then do that. So going back to US oil, I think that's kind of a similar pattern to what's happening here. So I think if it does get to here, I think it's going to either try and squeeze and then make a launch higher, or it's going to pull back and try and make another launch higher. But overall, oil's building. It's building a pretty good case. If we see aggressive selling from here, which is this resistance over here or here, and it clears through this, then you got to watch out below, because then you have that in play. But if this holds, then you just play round trip of that structure until one side breaks. But oil looks like it's building. It looks like it's building. Gold overall, I'm bullish on. I'll get more into gold in terms of potential trade setups with the members. But I'm bullish on gold. I'm pretty constructive on gold right now. Let's get into daily, and I'll just do some brief analysis on this because I want to save the majority of it for members. So, pretty smooth counter. So impulsive, corrective structure, breakout, next leg up, impulsive, corrective structure, pullback. And it's just swinging inside the channel. And all of a sudden the swinging stops happening. It's just kind of building. This is like accumulation. And then there's definitely a breakout structure inside this, which I think we even posted a trade setup about this on our website. Sasha, can you look at our recent commentary and see if we posted something about this? I'm pretty sure we did, and we suspected that this is probably going to break out. I'm pretty sure we did that. Did break out of this channel, so you got a base in place here, which is definitely kind of a bullish base. And so I'm very constructive on gold. I'm going to go more into detail on gold later on with the members. Don't want to get too much into that, but I'm very constructive on gold. At least, for the next 3 months. Sump1117, any good brokers do you recommend for U.S. citizens? U.S. citizens, sadly, with the regulations recently, we have limited options. If you're only trading FX, then Gain Capital is probably going to be your best bet. They have the most amount of instruments. They do have a web trading platform that works with TradingView. They have a desktop platform that's pretty good. It's still a little antiquated, but it's not bad. They just have the most amount of currency pairs, and they've been incredibly stable over the years. For the longest time, it was Gain and FXCM, just kind of neck and neck in the U.S. market. And then FXCM did that done move many years ago, and then they had to exit the U.S. retail market. If they hadn't, I think they would have just stayed neck and neck, up till today. Maybe somebody would have bought the other out, but they're both relatively the same in size, so it's hard to buy each other out when you're just kind of the same weight. I think Gain, if you're just doing FX only, I think Gain is probably your best bet. If you want to trade multi-asset class, then you can look at TD Ameritrade. You can look at Schwab, which bought TD. TD Ameritrade Thinkorswim platform is pretty good. Interactive Brokers, great pricing, but bad customer service in their platform. I'm not a fan. If you want to be multi-asset class, you want to trade stocks and FX and everything like that, TD Ameritrade Thinkorswim is a better platform, in my opinion. So hopefully that's your question on that. Tesla looking very interesting. I'll cover that with members. I definitely have some thoughts on that. Gene Pips, Chris, do you trade Bitcoin or any crypto? Not right now. Yeah, I don't trade Bitcoin right now. Just the volatility is not the volatility. And there's just still so many cryptocurrency scams out there right now. And there's just not enough regulation in the market. I like to trade more regulated instruments because that means there's less scams, and therefore there's less likely to be massive liquidity spikes. There's also some speculation out there that the majority of the transactional volume is like by a few whales, and if that's the case, then I don't want to get involved in that. I do have one student. He's been with me for a few years. He uses our methods, only trades crypto. In 2018, he did like 140%, and this year I think is up about 43%. So, but crypto, when you trade larger amounts, you don't want to trade less regulated instruments because they're more susceptible to scams, liquidity spikes, problems with liquidity, and that's a problem. If you start trading large amounts, that becomes a problem. I think once, crypto gets more regulated, then I'll start putting more and more into it, but not right now. I think our methods work really well in it, and I do like some of the charts, but I'm just not totally sold on it from a regulatory perspective. So good question. Sabine CCP, Oanda is good for U.S. citizens. Yeah, I haven't had much experience with Oanda. Yeah, so it's hard for me to really give much comments on it. Mr. Singh, do you have any recommendations for a UK citizen? Yes, XTB, I think would be a really good brokerage. It depends on what you want to be. If you just want to be an FX trader and you do want to have FX only or some multi-asset class, you want to trade some commodities, you want to trade some indices, you want to trade some shares, CFDs or something like that, XTB is a great broker. Their Xstation platform is fantastic. If you are not a member of our price action course and you don't have an account with XTB, we have a special, Sasha, maybe you can get the link on that on our website under Forex Brokers and XTB. You can actually get our price action course for free by meeting these conditions. And that's because we have an affiliate relationship with XTB. If you meet the conditions, they will give us a credit for you fulfilling those conditions, and that covers the cost of your course. So you have a way to get it for free. So XTB is one of them. If you want to be stock only, then DeGiro is the best low-cost European brokerage platform, but their platform is not super sophisticated. So I would recommend using Saxo for your platform in terms of charting technical analysis, particularly their Pro or their Go, which is their web one, and then execute on DeGiro because you get better pricing through DeGiro. You can actually trade stocks through XTB as well, though. They actually have a fair amount of UK stocks. In terms of platforms, I think the Xstation 5 is probably one of the best platforms out there. I think it's the most user-friendly. Their charts are fantastic. Their charts are like only like a notch below TradingView. And they're just super clean, super well done. Yeah, that's just my recommendation on that. Good question though. Okay. Oh, you're a member then. Yeah. So, but I think if you don't have an account with XTB, we might be able to credit that towards one of our other courses. So that's a possibility. Okay. Do I have, oh, that's right. Sasha can't post the link. So 1 second here. Here is the link to XTB about that. So if you want a chance to get one of our courses for free, that's the link to that. Main Man. That's a good name. I'm with Panda, not Oanda, but I'm with Panda for a few years now. See, that's one thing there. Didn't know what it was, but yeah, check out Panda. Yeah, I think you're saying Oanda, but maybe there is somebody called Panda. I don't know. Hard for me to say. Mr. Singh, could you get another course? Yeah, email me about it. We could probably do something with maybe the STC course or something like that, or ATM course or something, for sure. Okay, what other instruments y'all want to look at before we wrap it up? Sasha, do you know why Fernando is showing up in our list? Like, I see his actual image here. It's very interesting. I see yours and I see his image. He's muted. Kathy wants to look at nat gas. Something I almost never trade. I'm not a nat gas trader, but I'm actually bullish on commodities this year. I'm going to talk more in depth about commodities as a whole, particularly the index, the commodity index. There's some statistics that suggest there's some pretty good trade setups on it. Yeah, I'm not really a nat gas trader. I wish I had my friend. I have a friend who's a chemicals trader. So he only trades chemicals and nat gas and oil. And that's what he's been doing for a long time now. But just looking at the price action, we're at some pretty big lows here. It's kind of hugging the lows, though. It's not exactly the most inspiring. Huh. Interesting. Okay. Just kind of noticing some patterns, but yeah, I rarely ever look at nat gas. I don't even know if I've ever traded nat gas. It's just not something that I've really gotten into. We are at some pretty low support. There is kind of a squeeze happening to the downside here, which may suggest, it hits here before it bounces. If I wanted to be long, maybe small position here, more of a medium position here, but tight stops, because I wouldn't give this a whole lot of room, because we're after this sell-off, we're hugging the lows. So, and it's not getting much of a, I mean, this was an okay bounce, but this structure is weaker than this structure. Boom, boom, boom. That structure is better than this one, which is boom, lower low, and then same low. So you have lower low, we have low, lower low, higher low, bounce up, okay, but low, lower low, same low with lower highs, that's a weaker structure. So that price action tells me that it's not favorable right now. We are in pretty low values. I mean, we're very low in terms of values, so there might be a long-term play on nat gas, which is kind of surprising because oil is becoming, more and more of a problem, but natural gas, more clean, easier, cheaper. So there can be some construction on that. Have him be a guest speaker and your member. Okay. We got somebody in Russian here. You have to apologize. I don't speak Russian. My apologies. Human has a question. Why CFDs? Why not the future market for oil? I just don't trade futures. So when I look at things like that, I tend to look at CFDs. You're generally not going to have too much of a difference in terms of the charts. Yeah, there'll be some, but if you're looking at a continuous contract, then it's not going to be that much of a different. But I'm just not a futures trader. I've never really been one. We had a very interesting story when I was a broker at FXCM. We had so when I was there in 04 to 06, I was on the gold client division, which means that I was allowed to take care of clients. We only had so many brokers that could take care of the high-end clients. And so I was a gold client broker when I was at FXCM. And we had a client, I forget where he was from. I think he was from Saudi Arabia. And being that they can't have pork, he had a futures position on pork rinds. But something happened where he totally forgot about it. And with futures contracts, if you hold it to the expiration, you have to take delivery. And so here was this guy who, due to religious reasons, couldn't eat pork or anything like that. But because he forgot about his position, he had to take physical delivery of the pork rinds. It was kind of, I mean, it's kind of sad. I feel bad for him to be in that position. But yeah, that did happen. That actually did happen. Fuad's translating Russian for me. Thank you for that, Fuad. I appreciate it. And Fuad, you're going to have to give me the translation later. That would be helpful. Okay, what other questions? Stefan, do you think gold is going to go down on the daily chart? I cover gold. I'm constructive on gold right now. I'm going to get into more detail on gold with our members. So I don't want to go too far into gold right now because gold, silver, commodities as a whole, they're part of my top trades for 2020. And I don't get too much into them, but I'm constructive on gold. Can you trade CFDs in Canada? I'm pretty sure you can. It just depends. When I was in Canada, I was able to trade CFDs. So I was in Canada from 14 to 16. And so I was able to trade CFDs through Saxo. But if you are in Canada, I don't think you can get an account with Saxo unless, I think there's like 3 major conditions. One, you either have to be a licensed financial professional licensed in Canada. Option 2 is, actually, I think there's only 2. You have to be an accredited investor. That's how I got in. So accredited investor, depends on the requirements. It's slightly different per country, but I had to establish that I'd made over $250,000 the last 2 years and that I had a certain amount of money and available assets outside of my primary home. I sent in all the documents, fulfilled all the requirements, and then they gave me the account in Canada. But I think, if I'm correct, in Canada, you can't get an account with Saxo unless you're an accredited investor. But I was trading them with Saxo. Adnan Nice, are you going to do any trades in that live? Do you mean right now? No. 1, the market's not open. 2, none of these are in trade locations that I'd want to. So, and I'm generally not one who is doing trades live because when I'm trading live, I like to be focused on what I'm doing. I don't like to be focused on my audience. If I'm focused on my audience and trading live, I'm much more likely to make a mistake. And if I make a mistake, that's very expensive. That's a lot of money if I make a mistake. I don't like to make mistakes. So I'm not like those professional athletes that, in the sense of like, I'm just not very good at trading and then diverting my attention to, people live, because I did that back in the day when I was working for the hedge fund. And I did that in the first year I started Second Skies, but I noticed that my attention was just too distracted. When I'm trading, that's what I want to be doing. When I'm doing this, I want to be doing with my members. It's just not my style. Some people can do it, but it's just not my style. I tend to be the kind of person that I like to be laser focused when I'm doing something. Divided attention is a real thing. It's a neurological real thing. And there is what they call residue. And when you have that, when you switch attention back and forth, you actually lose your attention abilities. It's just not my thing. But the market's not even open anyways. He wrote hi dudes in Russian. Okay. You can in Canada, try CMC. Okay. Avanish, good to hear from you. Do you think there is going to be a worldwide financial meltdown because of excessive money printing by central banks, global debts? I certainly think that's a possibility. And I certainly think that is a legitimate thing because, you're talking an experiment that's never been done before. And anytime you do experiments like this financially that have never been done before, especially central banks. Central banks don't have a great history of really managing economies, you know, in long term. There's a lot of evidence that suggests that central banks are actually counterproductive to economies. Case in point, Panama. Panama does not have a central bank, and they don't have this policy of like managing the currencies or anything like that, or inflation or anything like that we do. And Panama has had no recessions or anything like that, especially internally, since they switched over to that. So there's a lot of evidence that central banks are actually harmful as a whole. I'm not a fan of them, but that's kind of more of a macro question. And to be honest, macro is not my specialty. I do have some kind of opinions on that, but it's so complex and it's an experiment that never has been done before. And from my experience, experiments like this that have never been done before tend not to work out too well. I think it's the wrong approach. Mr. Singh, can you connect Saxa with TradingView platform? I believe you can. I think they set that up this year. Attila is saying you with the S&P 500, you have a 7-point spread with XTB. If you're trading futures, you only have 0.25. Isn't it too much for a futures or CFD trader? I'm not an S&P trader, so it's hard for me to say. But you got to understand with CFDs, there's a difference. So there's a difference in leverage. Futures are going to get less leverage. So if you're someone who needs higher leverage, then CFD is far better. It really just depends on your conditions. If you're someone who needs more leverage, then CFD is going to be far better for that. You can only get so much leverage in the futures market. So to me, it's really more of a question of leverage. And also the great thing about contracts for difference is that generally you don't have in contracts for difference, you don't necessarily have like, it's not kind of a zero-sum market. Your CFD can be spread out through multiple liquidity providers. So hopefully I answered your question. Any books you could recommend worth reading for carry trading and creating strategies on it? Barry, I don't know of any out there. And I didn't learn my carry trading from reading books. I really didn't even learn trading through books. That's just not my particular style. One, I don't really find the majority of trading books out there that are good. The ones that I do find good are more about the stories of the personal lives of traders. But I have yet to really see a trading book that's really good. I can't even remember the last time I actually read a trading book. I've been just kind of bummed out by the trading book market. I got one recently, but I started to kind of skim through it and I was like, this is just all rehashed garbage. And it's the first trading book I bought in, like actual trading book with charts and ideas and strategies and things like that. It's the first one I probably bought in 4 or 5, maybe 6 years. And to be honest, I just wasn't impressed. So I don't know. I think it's very, very difficult to get a really good trading book out there. I think books that talk about mindset or lifestyles, I think those can be useful. But the thing about it is that strategies as a whole, they come and go. But their lifespan is not that great, but skills never die. Strategies come and go, but skills never die. So I would like to see a book that's more focused on skills than on strategies. Case in point, take this approach, strategies come and go and skills never die. Translate this to sports. So let's take American football. How many football strategies from the 1980s are still valid today? Do you think they're using the same strategies that they were from the 80s that they are today? No, it's way more advanced. It's way more nuanced. How many, coaches are running pure West Coast offenses like they did with the Rams in 2000? Nobody. So, but core skills, zone defense, man-to-man defense, reading coverages, those things never die. And so, I tend to, while strategies are useful, even on a quantitative perspective, hedge funds that go quant strategies, 12 to 18-month lifespan and they're gone. And then they have to come up with a new strategy and then a new one. They're constantly having to find inefficiencies in the market. And to me, that's very ineffective. Core skills, though, never die. The core skills of trading never die. Risk management will always be important. It's just as important today as it was 100 years ago. Core skills of reading price action context and order flow, just as important today as it was 100 years ago. And if you know my 3 models for translating price action context and the order flow behind it, just as applicable today as it was 100 years ago. So, you know, I've known a lot of mentors in this industry. I've been around for now 20 years. And I know one guy in particular. He's a nice guy. And I don't think I've met him personally, but I've talked with some of his friends and some people know him. And he's a nice guy, and I think he's a decent trader, but he was constantly selling strategy, no skills whatsoever. And then each year it would be a new strategy and a new strategy, a new strategy. And people are like, hey, what about the old strategy? He's like, oh, that's no longer effective. That to me is just, you're in this like washing machine tumbler that never ends. How do you get out of a cycle that never ends? You have to break the cycle and take a completely different approach. And that different approach, in my opinion, is skills. So I have yet to see an actual book that focuses on trading skills. They've all been kind of focused on strategies, and strategies will come and they'll expire and go, but skills will never die. So that's just my general approach with that. SWS, how often do you use pivot points for weekly and monthly, and how important is it? I don't use pivot points anymore. I'm considering revisiting them, but I don't use them anymore. It's just, yeah, I'm open. There's a couple books I have that are really advanced books, like $300 books on pivot points, and I'm considering studying them in 2020. And then I'll revisit it, and if I really like them and I'm convinced I'm gonna use it. But yeah, I don't use pivot points right now. Do you provide signals? Am I a signal provider? No. We were a signal provider in 07. We made money. That was the first year Second Skies was out. And we provided signals in 2010, also a profitable year for us. And both years, we like published all our trades. All the people that are part of the signals got access to all our signals. They were sent out email, all that. We made money both years. How many of my students made money from back then? Zero. And the one thing I realized is that, one, if I want to learn how to play golf, I'm not going to become a better golfer by watching Tiger Woods swing a golf club. The only way that will work for me to improve my golf game is if I'm already a professional. And there are neurological studies on this. We'll get into this in the mindset course that we're doing, like V3 in 2020. And there's a lot of new neuroscience research on it. There's these amazing experiments where they would have like ballet dancers. And what they would do is they would monitor the brains of professional ballet dancers. And then they would have them watch another ballet dancer. And they would have them perform the same dance. And the people they were watching, they had one of them do it like perfectly. And then they had one of them technically, deliberately do it incorrectly. And they would scan the brains of the people that were watching these professional ballet dancers. And the pros actually had neurological reactions when the ballet dancers were doing it incorrectly. Something the professionals could realize just in their brains. They were watching it and they're like, oh yeah, that's off. That's not right. The beginners had no neurological reaction. And that's because they didn't have not only the embodied knowledge of being a professional ballet dancer, but they didn't have the experience to know the difference. So beginners and intermediates had no neurological reactions whatsoever. Only the pros could see another pro and spot the difference and actually be able to use that information. Same in trading. If you are a beginning golfer, you could watch 10,000 shots of Tiger Woods. It will not make you a better golfer. So that's one reason why we don't do that. Two, from my experience, to have 2 years of signals and nobody make any money, that tells me that signals is not an effective way to teach people to trade. And what I've realized with the signals is, one, that when I gave signals to people, we would have trades that would be massively profitable. Let's just say they made 300 pips. I would get emails from my students and they'd be like, you know, oh, great trade on that. They're like, I made 150 pips. And I was like, What do you mean 150? We did 300. They were managing the trading signals. And because they didn't understand the signals fully and our methods, they were trading those signals based on their own emotions, their own risk parameters, and their own style. So they were altering our trade signals. I didn't have one student, and I had hundreds and hundreds of students back then. I didn't have one student that was with us for that entire year of trade signals that had traded every signal exactly the way we did. Not one out of hundreds. Why would you do that? Why would you sign up for a signal service and not trade the signals exactly the way they did? Why would you do that? That makes no sense whatsoever. And so the pieces started to come to me. I'm like, one, signals don't teach people how to trade. Two, they don't follow them. Three, if they don't understand them, then they are just going to trade my trade signals. Why is that effective? Not at all. It's the worst model for teaching people how to trade. From my experience of trading for 19 years and teaching for 12, I have yet to see anyone that's followed somebody else's trade signals over 2, 3, 4 years, been profitable, and learned how to trade themselves. I have yet to meet that person. And I've met thousands and thousands of traders. And our goal is, what's the goal of Second Skies? To change the way you think, trade, and perform. And signals don't do that. So it's not an effective method, in my opinion. I think it's a very bad method. And I have yet to meet the trader that has been able to, for 3 years, trade somebody else's signals exactly the way they were traded and make money. I have yet to see that happen. So that's my thoughts on that one. Christian Wallace, my issue is properly backtesting. Very hard for me to be objective when there are so many different price action behaviors. Any good strategies to overcome this? You know, while there's an infinite amount of variety of price action behaviors, there are repeatable patterns. And your job is not to catalog in your brain all of those patterns. Your job is to find the repeatable patterns and trade them, exploit them as much as possible. So I think you're kind of over intellectualizing it. And, you know, markets are a combination of order and chaos. There's no market that's all order, because if it was, there would be no inefficiencies and nobody would make money. And there's no market that's all chaos, because if there was, nobody would be making profit out of it. There'd be no patterns that repeat themselves. Markets are a combination of order and chaos. Your job is to, when there is more chaos, or another way to put this is less clarity, is to trade the least or not trade at all. And when there is more order and repeatable patterns that you can have an exploitable edge, that's your job to engage that as much as possible. So instead of trying to look at it as oh, there's this behavior and this behavior and this behavior, your job is just to look for repeatable patterns and exploit them as much as possible. So that's my thoughts on that. Mr. Seen, I believe you like Eckhart Tolle. I've actually never read any Eckhart Tolle. So I know some people have, but I don't have much to say about that. Top books. I'll probably do a new, for 2020, I'll probably do a new YouTube video, and it'll be top books. Maybe I'll do a top trading books, and maybe I'll do a top mindset books, and maybe I'll just do a top books. I am a voracious reader. In fact, my reading has actually been so prolific and so much that it caused me to get these. I had fantastic vision for the longest period of my life, and I still have great long distance vision, but because I'm in front of a screen so much, and then because I'm reading on average about a book a week, I am a voracious reader. I am absolutely insane when it comes to reading. And because of that, I had to get glasses. I got them back in 2018. So I will probably do 3 different videos: top trading books, updated, and then I will do top mindset books, and then I will do a top books as a whole that I think people should read. So yeah, good idea for some topics there. Daniel's saying, I find Steve Nisen's work on translating Japanese candlesticks and beyond candlesticks useful. I actually don't. I am not a fan of candlesticks because I think candlesticks are a passive pattern, and all they do is teach you about some rudimentary ways to approach price action within those candlestick patterns, but they don't teach you how to read candlesticks outside of that, outside of those patterns. And they get you pattern hunting. And they're led to believe that if you can find these mystical patterns, that you're going to all of a sudden find these great trades. But what's his name, Bukowski, had tested all the candlestick patterns, and most of them are garbage. Most of them underperform incredibly. There's one pattern out there called a Hikaki pattern, which some recent mentors and trading gurus started calling fakey patterns. He tested them and they were so trash. He didn't even bother like publishing much stats about it. He just gave the basic stats on them on his website. And then he's like, yeah, these are trash. Like they're just so bad. And he tested over millions and millions and millions of repetitions. I actually have a intern right now who got accepted for an internship at SMB. He's kind of a quant guy. And we are doing statistical testing on candlestick patterns deliberately to publish our own research and completely debunk them, because candlestick patterns, in my opinion, are absolute trash. It's a passive skill. You sit back, oh, there's a pattern there. Okay, let's get involved in the market. Oh, there's no pattern. I'm just going to sit back. So it's passive. You're waiting for these patterns to emerge before you start engaging the market. To me, that is a passive skill, and that's worse than an active skill. Active skills are learning to read overall price action context and that gestalt and the order flow behind that price action. And it's not limited to 1, 2, or 3 bar patterns. And so I think once we publish our stats, people are going to be like, okay, we shouldn't trade candlestick patterns again. Not only that, they often give you worse entries, because they're showing you well after the order flow has been dominantly established where the market's going, and they're late to the party, so they give you much worse entries. So that's my view on candlesticks. I'm not a fan of them. Did you read any book from Nelson Nilly about Elliott waves? No, I haven't read any books on Elliott waves. How many this is an interesting question. And then do I have any questions over here? I got one from Kathy, so give me a second here. And Amaya, good to have you here. Can I have your view on Nifty? That's funny. He's saying that because I just met with him recently. He's one of my students, and people who are members of my price action course get one private meeting with me where we analyze their trading, their stats. And he used that meeting to, because he's trading the Indian stock market. And so we revamped our discussion to kind of go over how he could attack the Nifty. So yeah, we'll go over the Nifty, Amaya. We'll talk about that briefly, but I want to cover that more for the members and the private one. So we'll go over that one. But Kathy, I'll get to your question in a second. So where was the question? How many strategies do I have to trade if I want to be profitable? You could do it with one, but keep in mind that one is going to be limited in terms of the number of environments that you can trade. There's very few individual strategies that allow you to trade multiple environments, multiple asset classes, multiple time frames. Very, very few. Skills do, but not strategies. And so with that being said, you could do it with one, but instead of focusing on how many strategies, I would focus on building your core set of skills, elevate those, and then you'll be able to trade multiple environments, multiple asset classes, and multiple time frames. I don't find it I don't consider it to be price action. There are a lot of people that teach price action, but then they're just limited to higher time frames. Why? Nobody has ever been able to explain to me why somebody should be a price action trader and only be able to trade on the higher time frames. Nobody's been able to explain that to me legitimately. Like, it's kind of like saying, imagine being a quarterback in the NFL and American football and only being able to play against zone defense versus man-to-man. Would you ever, if you're the coach of a team, would you ever want to have a quarterback that can only play zone and can't play man-to-man? No, absolutely not. Let's try another sport from across this pond. Football, otherwise in the West, in the US, is soccer. Would you ever want to build a core strategy or skill that only works against German teams but loses against Spanish, Italians, French, Swiss, or anything like that? No, you would never do that. And you would never think that you are a well-established soccer player and you really have the skills of a soccer player if you can only play against one style. That's when people say, hey, price action and our price action only works on higher time frames and you should only be trading higher time frames. That is, to me, the most absurd thing ever. If you have the core skills of trading price action, you should be able to trade any time frame. That doesn't mean that you're going to be good at all time frames, but you should have the capacity, in theory, to be able to trade all time frames. And then eventually you find out which ones you do best. You might be somebody who's only good at lower time frames. That's a real possibility. You might be somebody who's only good at higher time frames. That's a real possibility. But if that skill that you are using is only available to a very small subset of the market and completely fails in other markets, it's like being the quarterback who could only play against zone and completely gets crushed against man-to-man defense. Or it's like the soccer player or football in most of the world, where you can only play against the Germans and you just get absolutely destroyed against the French, the Spanish, the English, and everything like that. That's just, nobody would ever do that. There's nobody in their right mind that would actually do that. So those people who are saying like you should only trade higher time frames or you should only trade lower time frames, or our price action method is legit and it only works on higher time frames, it's just complete BS. It has, in my opinion, the wrong approach to trading. It's not approaching trading as a skill, because if you have the skill, it should be applicable to all time frames and it should be adaptable. That doesn't mean you will be profitable in all time frames, but it should be adaptable. So hopefully I answered your question. Anton saying, I've been following you for years. I love the consistency in your work. I've been consistent in the markets for 6 months after 5 years of experience in the months. Congratulations on that. That's awesome. You know, it's different for everybody. Some people it's 6 months to become profitable. Some people it's a few years. Some people it's 5. It doesn't matter. The fact is you've gotten there now. Now you should be focusing on what do you need to do to stabilize that, and then what do you need to do to take it to the next level. You know, we have those kind of pathways and frameworks built in to our courses to teach you how to take skills to the next level. So do you have any tips moving forward? Also, what would an investor want to see based in the UK? Do I have any tips going forward? Anton, we have a whole webinar in the price section course on, I think it's called 4 stages of becoming a millionaire trader, or 4 stages of becoming a professional trader. So that gives you the kind of framework for moving up the skill tree and taking things to the next level. That's kind of the most direct approach there. What would an investor want to see based in the UK? Do you mean that you are looking to attract investors now that you're profitable? Is that what you're saying? Okay. So stable track record, really good risk control. Unless they're a punter investor, and a punter investor likes to take massive risks for huge outside gains, but generally you don't want punters and investors, because once they get their outside gains, they're usually going to be gone. You want investors who are going to stay with you for a long period of time and who are matched to your risk tolerances and profiles. So Super important that you learn to control risk and are super consistent with risk, because any professional investor that sees that you're inconsistent with risk, then how can they protect their downside if your risk is not consistent? Super important. Risk needs to be consistent. It has to be within kind of a profile range to their risk tolerance. Some people have a tolerance of 5%, some people have a tolerance of 20%. Your job is to establish kind of a clear profile of risk, downside, and tolerance. And then once you have that, attract the investors who are most kind of mated to that or paired up with that. Ideally, you should get your performance audited, either a third-party free service or go to a professional accounting firm. You can use the Big Four, whatever. Have them audited, and then you have audited performance results that you can hand into an investor. So hopefully I answered your question. And then you're going to need a good legal structure to work with them to take in client funds or manage client funds. So those are kind of the pillars of working with investors. Daniel saying, what time frames do you find trading is more profitable for you, the higher time frame, the lower time frame? Both. I don't have one that's more or less profitable. I am the kind of person that, and I've realized a long time ago that just the way my brain works, I am actually less efficient if I trade only lower time frame or higher time frames only, and I'm most efficient if I trade both. I'm most efficient if I have good day trading engagement, but then I also have good swing trading, long position trading, or long-term position trading that builds over time. It's just the way my brain works. The most important thing is you have to find out how your brain works. Some people are much faster, not quite as impatient. They look for quicker results. They just think faster. They're able to calculate faster. Those people tend to lean towards day trading. And, you know, if you have to be a swing trader, you have to be a little more patient. You have to be a little more spacious for fluctuations. And you have to be able to tolerate overnight risk. And that takes a slightly different brain and mindset. And so if that's you, then you should lean towards higher time frames. If you're someone who does well in both, then, you know, you need the constant day-to-day engagement, but you also like to have positions build over time where you build a portfolio, then you need to do both. The most important thing is you find out how your brain works naturally, and then you build around that. It's a good question. I'm reading a book from Jack Schwager about futures market, 700 pages. Any suggestion about it if you have read it? I haven't. Last time I read a Schwager book was the original Market Wizards. I haven't read anything since. What do you think of Hearst Cycles? Never heard of it. I'm not really someone who invests a lot in, yeah. I'm more focused on, there are a couple areas of new research I'm looking at, but once I'm done with that research, then I will start to talk about it more. But I'm more focused on going deeper in the skills that I have instead of learning new things that are going to have a much longer learning cycle. And then I don't even know if I'll need like a year or two to use them before I really feel like I'm highly competent in them. And then whether I can make them work for me or not, I'd rather just go deeper and deeper into the skills that I have. Just like, you know, how much time do you think Lionel Messi spends trying to learn new strategies versus taking his skills deeper? How many times in practice do you think he practices the same core skills of dribbling, trapping, you know, ball control, positioning, versus learning a new technique that somebody else taught? I'm going to be willing to bet the core skills he's practicing them the most, because there is no depth that you can take them. There's really no depth that you can take footwork in soccer or football. There's really no depth that you can take dribbling. Nobody's found the absolute bottom in terms of depth and the highest level of skill. And that's how players get better over time, is they keep going deeper and deeper into those core skills, and they're able to exploit them in ways that other people aren't. I would rather go deeper and deeper and deeper. Anybody who watches American football, Tom Brady, is he doing anything different than he was 10 years ago? No, but he's taking those skills deeper and deeper and deeper and deeper. He's still a pocket passer. He's still great at reading defenses. He still has like an average release time of like just under 3 seconds. Over the last 10 years, it's been the same. He's taken even the most basic skill of throwing the football. The guy's thrown the football like 100,000 times, and he's still refining how well he throws that football. Why isn't he learning a new way to throw the football? Because he realizes that depth is better than having a bunch of new patterns and cycles and things that we're approaching it. So that's my approach. I approach trading like an athlete. That's my background. That's my trading. Anthony, oh, sorry, Kathy's question, real quick. What is your meditation routine if you have one in the morning before trading? So I do have a meditation routine. My general routine before, generally every day, I get up between 5:30 and 6:30 after showering, and just actually sometimes I check email just to make sure there's nothing crazy going on in the market. No major business things like, hey, website, issues or something like that. If it's all green at that point, then I go to shower, and then I have a little tea, and then I start my morning yoga, and then I start my morning meditation routine. And the meditation practice, while I have some practices that I haven't shared because I'm not an authorized Buddhist teacher, so I don't have a license to teach all practices, my teacher has only given me permission to teach a few practices, and I've taught those in the Advanced Traders Mindset course. And so I still practice them today, and I can see myself practicing them for years and years into the future. Then after that, but I have several practices that I have to complete every single day. Once that's done, I do my morning prayers, and then I, tea, food, and then I start trading basically. So that's my morning routine almost every single day. Okay, cool. Glad it helped. Anthony Cuswanto, is supply and demand concept the same as support and resistance zone? Similar, but not the same. The underlying concept behind, just look at the word supply and demand versus support and resistance. One's based upon, like, support and resistance is based on order flow, historical order flow. Supply and demand, the core concept has to do with available supply, available demand. That's different. And in FX, that's not really an applicable concept, because when is there ever an issue of supply when trading the euro dollar? When was the last time you hit the button to buy or sell a particular currency and your broker is like, yeah, we don't have that availability. We don't have that liquidity available. Never. It's never an issue of available liquidity unless you're at the ultra high levels. But even then, euro dollar, there's more than enough liquidity. S&P, more than enough liquidity. So it's a different concept. I prefer support and resistance because it's ubiquitous across all markets. It's not based upon availability. The only time I've ever had an issue with available supply or available demand was 2003. I was in Oakland at that time, 2003. And I was trading dollar Thai baht during an illiquid time. I threw in a 10 standard lot position. My broker at that time, GFT, did not fill it immediately. Like, I had never had a trade before that I clicked the button and it was just like instantaneous fill. Dollar Thai baht, 10 standard lot trade, hit the button, nothing. Why? Because he didn't have the available liquidity at that time to fill my order. 30 seconds before he could fill it. Okay, then supply and demand is a real issue. But the original concept behind supply and demand has to do with availability of liquidity. Support and resistance doesn't, and that's more ubiquitous. So that was the only time I ever had an issue filling a trade. I'm trying to think. Yeah. Dollar Thai baht. Certain option trades, sometimes it's hard to get option pricing. But yeah, that's my thoughts on that. Desirous IT. Can you please state something about correlation? I always suffer with that. Or in Forex, should we rely on correlation? Should avoid it? That's a really big concept. To give you kind of the short answer, correlation does not equal causation, but it's relevant. That would be the general way to approach it. Correlation does not equal causation, but it is relevant. To get into that more deeply, I'd need a lot of time to really get into that. Main Man. I love that name, Main Man. How many time frames do you trade between? So I trade 1 minute, 3 minute, 5 minute, 1 hour, 4 hour daily and weekly. So my day trading time frames, 1 hour and below, and my swing time, swing trading, position trading, long-term trading, 1 hour and above. This is an interesting question. Curiosity question. What do you think about Warren Buffett as an investor and human? I think he's a great investor. He's a long-term macro investor. It's not my style, but I think it works for him. And what I think of him as a human, I think he's human. I think he's got some very unique approaches and ideas about markets. I don't know much about him as a human, but I think he's generally like a conservative long-term guy, and I think that can be very effective. Other than that, I don't know much about him personally. Do I have a mentor? Yes, I do have a mentor. I have a teacher that I've been working with for 19 years. Do I have a mentor in the trading world? I do not. It's hard to get, at my level, it's hard to get mentors above me. It's not that they're not there, but they're usually very busy. And they, unless I'm like a part of their team, like I'm on their hedge fund or something like that. But even when I was trading for the hedge fund, I often found out that I knew as much as my CEO or president, sometimes more. And so, but I do have a mentor. I think everybody should have a mentor without a doubt. I don't care what field you're in, you should have a mentor. They don't necessarily have to be a mentor in your field, but everybody should have somebody that you work with that is your teacher. Because if you don't have somebody who you defer to, who you take instruction from on a consistent basis, and you understand their framework for mentorship, their approach, you have like a very established relationship with them, ground rules for relating to them. If you don't have that, then how do you ever go outside of your own mind? How do you ever go outside of your own thinking? Who challenges you, forces you to think outside of your own thoughts, patterns, conditions, and habits? How? How do you ever grow unless you have somebody who is further along than you and that you have an established relationship with and ground rules for relating to them, and you get constant feedback from them? How do you grow? That's why I don't think anybody can really grow as a trader unless they have a mentor. There's a few people that can, but I don't know of a trader out there. Maybe Jesse Livermore, but yeah, Jesse Livermore might be an example. But if you look at all the great traders, especially market wizards, they all give credit to somebody that they trained with. Every one of them. So the number of traders that are like exceptional traders that didn't have a mentor, very small percentage, maybe 1%. The rest all had people they trained with and learned from. So hopefully I answered your question. Okay, we're gonna do a few more questions and then we're gonna wrap it up. How many hours of sleep do you get a night before trading? I prefer to get 7. People are gonna be different, but generally no less than 6. It's usually between 6 and 8. And the key thing is that A, I feel rested, and B, I've gone through REM sleep. REM sleep is where your brain really gets to rejuvenate, detox, and cleanse itself. Your brain is actually, if you get proper sleep, is cleansing itself of toxins while you're sleeping. And if you have a good enough continuous sleep cycle, your body's also detoxing. We have circadian rhythms for a reason. There's a reason for that. And sleep is super important for that. Anton saying, thank you for a detailed note, all your points, very good for your time, all the best in your head, and to you as well, Anton. Jabulo Makubela, forgive me if I'm saying that wrong. There's certain names I struggle with. So how is it possible to get very good at trading if you have no mentor? I don't think it is. I don't think it is. Granted, I start off really well, but even then I struggled and got into my own personal resistance points in training where I needed somebody to give me feedback. Does Lionel Messi have a coach? Yes, he has several. Cristiano Ronaldo, does he have a coach? Yes, he has several. Tiger Woods, yes, he has several. Tom Brady, yes, he has several. Professional ballet dancers, yes, they have coaches. Why would you think that trading is any different? Did Bruce Lee have a teacher? Yes. So look at all elite performers across a broad range of skills, performances, whatever. They all had coaches and mentors. Why would you think that's anything different? Why? Doesn't make any sense. Doesn't make any sense to me. I think you can build your skills without any mentor, but part of growth is having feedback. You need a feedback model. And that feedback model, unless you're like 100% clear and relatively enlightened, your feedback model can't just be you and your interpretation of everything you experience in the markets. There has to be some perspective outside of you that gives you feedback. And it can't be software only, because software is not going to give you feedback on your psychological performance, your biological performance, your mindset, your thoughts, your thinking patterns. Software is only going to give you feedback on your actions. But a lot of your actions, and it's going to give you just based on end result, but it's not going to give you feedback on your internal process. And we're not robots as traders. We have internal processes that affect our output. So you need someone, something, and they have to have a framework, and a framework you understand, and an approach to give you feedback on. You always need feedback to grow. And that feedback has to be outside of your own mind, thoughts, conditioning, habits, whatever. It has to be. Otherwise, you're forever stuck in that. And so you need someone to give you structured feedback. The more continuous the feedback is, the more structured it is, the more personalized it is, the better. That's how you grow. You can start off by using my channel. How about using you and your channel as a mentor? There's no feedback though. It's passive. It's just whatever I put on the channel is passive feedback. There's no structure in that, other than the frequency I give videos. There's no active feedback. You need an active feedback model. Think of it like a professional athlete. Do they look for a YouTube channel to get feedback, or do they want active feedback, structured feedback within a framework of thinking, strategy, approach, skills, all that? Think about it like a professional athlete, and then that will tell you how you want your feedback. Desirous IT. Okay, we got a few more questions, and then we're gonna wrap this up. Would you please state for day trading what session you usually use, please? I trade US and Aussie stocks. But the most important thing is that you trade a session that is best for your biological circadian rhythms. I do not recommend trading a session that is during your normal sleep times. You know, when I was working at FXCM, we had a New York desk, an Asia desk, and a European desk. And when people moved from the New York desk to the European desk, people that did not have bags under their eyes all of a sudden had bags under their eyes. People that did not have dark circles under their eyes all of a sudden had dark circles under their eyes, because their biology was getting upended and it was moving at a non-natural rhythm to the body. We have natural circadian rhythms. If you dishonor that, if you go against that, your body, you're working against your body, and your body's going to not function as well, not as optimally. That's why you don't have professional soccer games at 2 a.m. because they know that athletes will not perform that well at that time period. They're during the daytime for a reason. Maybe at night in the evening, but there's no soccer games at 2 a.m. And you know, that's why also when a country is hosting the World Cup, the country that is hosting the World Cup tends to perform really well because they're in their natural daily rhythms. The ones that move further off that, they're the ones that often struggle, really struggle, like most of the time. I wouldn't be surprised if when you have World Cups in Europe, European teams are more likely to win. And when you have World Cups in South America or something like that, Latin American teams are more likely to win. You know, in what was it, the one in Korea? Korea went to the semifinals. How? Yes, home field advantage for sure, but they were also within their natural biological cycles. Very hard for a team to perform when they're off their biological cycle. That's why teams get there months ahead of time so they can adjust their biological clock. Teams know this. They know that you're going to perform better when you're on your natural biological clock. So if you're going to day trade any session, it should be one that's natural to your biological clock. And there's really good evidence that if you are an early morning person, your day trading session should be in the early morning. If you are someone who sleeps in, your day trading session should be later in the day. It shouldn't be like, let's say you're someone who sleeps into like 8, 9 o'clock in the morning. Your day trading session shouldn't be like at 8, 9 o'clock. It should be like 10, 11, 12, 1. Whereas if you're somebody who gets up early, 5:30, 6:30, the closer your day trading session is to that time, the better. Whereas if you have a day trading session later in the afternoon, it tends not to perform really well. Very good question. Anton, me again. I got a Muse headband, want to get a ring next. Do you have any recommendations on where I can get good information about sleep? I have an article about sleep. I would recommend spending some time studying the neuroscience on sleep. It's very good. It's very clear. Sleep is something you should invest in. It will help your biological and neurological performance over time. Should you pay for a mentor? Yes, I do. I pay a monthly fee to have my teacher and the relationship that I do with her. And even then, I only get access to her. I could get more access to her, but I only get access to her, like, I only communicate with her on average maybe once a month. I've been with her for 19 years, so it's easier for me to do that, but I pay for a mentor, and on top of it, I give her money on top of what I pay to get access to her. In our school, we have different levels of access, my Buddhist school that I belong to, and you can get different levels of access. You have to get accepted to it. You can't just buy your way in. You have to actually get accepted, complete requirements, all these things. But I'm at pretty much the highest level of access, except for somebody who's going for like full-on ordination. And I am training for that, but I'm not going for like the full level. So I get a pretty high level of access. Also, I'm a longtime member. But even then, I pay for that. And on top of it, I give donations above and beyond that because I believe in supporting my teacher who helps me grow as a person. So why wouldn't I support them? So yes, I believe people who pay for a mentor and develop a good relationship with that mentor grow faster than people who don't. To me, it's a pretty clear pattern. Michael says, I have a tight schedule working 14 hours a day, and by the time only trade the Asian session. What can you do in your scenario? If you can, and you can day trade Asian stock markets, particularly the open. Plenty of volatility in the stock markets. Otherwise, you're going to have to do kind of end of day swing trading in FX. FX moves in Asia are not too huge compared to Europe and US. So then you'd probably want to do swing trading or something like that. But if you can, check out stock markets and trade the open if you can. If the time available when the market's open and the Asian market's open, you can get there for the open, ideally a little bit before to get ready. Trade the open. Most amount of volume is always in the opens. So that's an opportunity. Desirous IT, thank you so much, Chris. Your kind answers to my questions are going to help. Thank you so much again. You're welcome. Do you work with students as mentors? Yes, I do. And my general framework for working with students is to become a member of one of our courses. In the price action course, we have weekly coaching sessions like this, except a little bit different. And then the ATM and the others, they're monthly coaching sessions because they're smaller courses. Do I work with students beyond that? Yes, but they have to fulfill a lot of requirements because I only want to work with advanced students at this point on a one-on-one basis. So they have to fulfill like risk requirements, consistent risk management, take some courses, go through the mindset material, because why should I reteach them individually something that I have a whole course on? I'd rather that go with somebody who's gone through that, really gets it, and then we can kind of communicate on a more advanced level. That's how I generally like to work with them. Okay, any other questions here? No. Anything else I want to wrap up with? Okay, I think we're pretty good to go. Plus, I got to go to the loo. I've been drinking a lot of fluids and haven't gone to the bathroom in like 2 hours over that. So let's go ahead and wrap this up. I hope you guys enjoyed this session. I hope you really liked it. I hope you found it engaging and useful. Members, stay tuned. We're going to be doing the private top trades for 2020. We're going to go into a lot more FX, a lot more indices, a lot more commodities. And so I'm super excited about that. If those of you that are non-members want to become a member, check us out at secondskiesforex.com. Until the end of the year, we have about 50% on all our courses. So that's the trading courses. We have price action, stock course, trader's mindset, Ichimoku. We have a free beginner's course if you're new. Other than that, we have a ton of trading lessons. You can keep up with our general trade ideas and recommendations. We have some great tools as well. But if you want to work with me more personally and become a member, then you want to check out our courses. That's how you get more access to me. And if now is the time, because it's like 50% off most of the courses. Prices are going up next year come January 1st. And then on top of it, we're going to be taking pretty much all the courses, ATM, APA, Ichi is going to go up at the beginning of the year, but I don't know if it's going to go up after that. But all the other courses are going up significantly next year. So if you ever want one, now is the time. Otherwise, it's financially irresponsible not to, because you're paying more money to later. In Jimbalu, Makubela, we're going to be covering that more in depth. I'm going to cover that more in depth with members on the US dollar, because that's a very long question. And there's a lot of different scenarios that can play itself out on that. So I have my general view of the US dollar index. If you missed that part of the webinar, then you can watch the recording once it's up. Go with that for now. And then with members, I'm going to be going into a much more in-depth about the US dollar and election scenarios, because that is much more of a nuanced conversation. So I hope you guys enjoyed this very much. I hope you have a wonderful new year, and that you really take this time to look back upon what you learned, where did you grow, and what areas do you need to grow, so you have a plan going forward for next year on what you need to work on, strengths and weaknesses, augmenting strengths, plugging weaknesses, and have a real plan of action of how to take things to the next level. Every year, you have to take things up to the next level. Second Skies as a company can't show up to traders in 2020 the way we did in 2019. We have to take that and go to the next level. And as a trader, you have to do the same thing. Just like athletes, every time they come back to training camp, they have to show up with more verve and take things to the next level. Because if you stay at the same level, you're losing ground. Everything's evolving, and you need to gain ground. So what do you need to do in this next year to take things to the next level? What's your clear plan of action? What do you need to work on and augment? And what holes do you need to fill? That's what you need to be focusing on every year, going to the next level. So I hope you enjoyed this video. I look forward to your comments and questions. Be well, have a great new year, and I will see you guys next time. Take care, everyone.